Great, thank you very much. It's good to be here. I'm from Real Energy. We're listed on the ASX. Our ticker code is RLE. So we're Australian. We're based in Queensland, or our assets are based in Queensland, in the Cooper Basin, which is the largest onshore basin in Australia. There's been 6 trillion cubic feet of gas produced out of that basin, and 300 million barrels of oil produced. I heard someone say earlier today the things that investors should be looking for is brownfield opportunities in proven basins and particular gas opportunities. Well, we are those things because we have a brownfield opportunity in a proven basin right next to pipeline infrastructure, and I'm going to talk about it now, and it's a gas opportunity. The prize we're after in our acreage, 13.7 TCF, that's an independent assessment by De Golliers and McNaughton of our main block, which is 927, you'll see in a minute. Corporate snapshot. So we have 255 million pieces of paper out there. Market cap at the moment, 23 million Australian, 9 million cash. So very low enterprise value for, as you'll see, a great opportunity. Our top 20 own 49%, 23% is held by management, including me. I'm the largest shareholder in the company. I founded this company. I put a lot of my own personal money into it, and keen to make sure it's successful. In terms of the overview, we control 100% in 2,761 square K. We have already a 3P or 3C gas reserve from 2 discoveries of 672 BCF of gas. We're pursuing this basin centre gas play, which I'll explain in a minute, but it's extensive through particularly the main part of 927, and we're very close to infrastructure. Recently we signed a deal with Santos, which is the largest operator in the Cooper Basin, where effectively they'll toll treat our gas, so it means we can sell into the national grid, and as you'll see, there's great opportunities at the moment in Australia to sell at the current gas prices. We have signed an MOU with Western Energy for 3 petajoules of gas over a 5-year period. Effectively, that'll be something in the order of about $25 million a year. And we've got a drilling program that's fully funded. In terms of the management and board, I'm originally an accountant. I've worked with the current Prime Minister in his investment bank and Turnbull Partners, and then have been involved in public companies for the last 20 years. The most recent role I had was with Mosaic Oil. That was an ASX listed company. We sold that to AGL Energy for 142 million, and effectively we're looking to do something similar here. The other board members, Lan Yuan, who's the chairman, he's one of the premier petroleum geologists in the country. Norm Zillman, he's also a very well regarded petroleum geologist. He started a company called QGC, which you may be aware of. That company was bought by British Gas for $5.7 billion, having been a 20 million IPO a few years earlier. In terms of the other technical members, we've got Terry Russell and Ray Johnson. They're extremely well qualified and been working in the Cooper Basin for over 30 years each. The opportunity is really from the high East Coast gas prices. You've got a chart here of just over the last 10 years what gas prices have done in Australia. Effectively, they've over doubled in price, and we think that the price is going to be quite elevated for a number of years. There's really a gas shortage because of unique circumstances where two of the main states have had moratoriums on gas development. That's New South Wales and Victoria. You can't drill any petroleum wells in those states, even though they have gas. It leaves Queensland and South Australia as supplying the East Coast. Thankfully, we're in Queensland, so there's no moratorium there. There's no ability not to frack, and hence, why we see the high prices continuing for some time. The other thing too that is contributing to high prices is there were some export projects in Queensland where effectively coal seam gas is being exported to China, Korea and Japan, and that's meaning a lot of gas has been taken out of the market. So the prices are likely to stay high for some time, and this is a chart about the supply situation, and really there's a lack of new supply coming on, or not enough supply to meet the demand. In terms of our acreage, this is where we're located, those blue areas on the map. The red lines represent the pipelines that go to the main capital cities and also to the export market. So because we're conveniently located with all this gas infrastructure, there's a number of gas plants here. We can export our gas either to Gladstone or down to the southern states, and there's plenty of potential industrial buyers that are keen to sign up. I should also point out just next door we've got this yellow area is Santos, which is the main operator in this basin. Okay, in terms of a little bit about basin-centred gas, essentially we're targeting gas down here. It's not structurally dependent, and so you don't need so much seismic. It's going to be laterally extensive over a wide area. And that's the important thing. In terms of geological risk, it removes a lot of the geological risk, in our opinion. These are the two wells we've drilled so far, Queenscliff 1 and Tamarima 1. Subsequently to us drilling those two wells, Santos have drilled 12 wells in the adjoining acreage. All of those wells are described as either as gas production or future gas producers. So they're certainly proving up the basin-centred gas play. We did a 5-stage frack in Tamarima 1, and we're getting improved results up to, in fact, over 2 million cubic feet a day. We think that will improve with our subsequent wells, which we're going to drill early next year. We're going to do Tamarima 2 and 3, and we'll talk about that in a sec. This is the log correlation. I probably don't have time to go through that, so I'll pass on that. And this is the resources in play, as I mentioned. That is the well locations for Tamarima 2 and 3. We've also got some other wells on there as well. And we've got a couple of slides about well design. So, look, to summarise, we think we're one of the best East Coast exposures. We're pure focus, unlike some of the other potential names. Near term, we're focused on production, and we're hopeful that by the end of next year we can get into production. With our MOU with Santos, we've got a very low valuation relative to the resource potential here, and we've got a strong cash position, 9 million Australian, no debt. So we think it's a very exciting time, and we're looking forward to producing some good news to come. So thanks for your time. And if you do have any questions, please come and see me. Thanks.